All right, guys, let's talk about NVIDIA. NVIDIA has earnings coming up this week. A lot of people within our Discord community have been asking me, how do I think their earnings are going to go? And if I'd be getting into NVIDIA long term here, seemingly like potentially we have a bottom. And so in this video, we're going to talk about pre-earnings. We're going to actually look at the company from a fundamental standpoint. And if I think that investing in the company right now is a great deal, a fair deal, or not a deal at all. And ultimately what I would be doing as an NVIDIA investor. So hit the like button, subscribe, check out our Discord community. The link is in the description. We have over 9,500 investors and traders within our Discord. You should definitely check it out. You guys will get access to free courses, free live streams, free seminars, free webinars, access to all of my long-term entries and exits on my long-term investments, as well as all of my trades. The link is in the description, and you can go join completely for free. Now, looking at NVIDIA, just like the market, has had a very bad year. You can see that this is a monthly chart looking all the way back to January of 2020, or of January of 2012. And we've been basically following this mean for a long time until we went insanely parabolic over the past 3 years, like many other companies. And since then, we had a massive rally. Finally, the bubble burst. We've pulled back to the 200 SMA, which, if you realize, within this time frame, basically still from 2019 until now, NVIDIA is up huge. Like, it's still up huge. If you look from just January 2020, basically before the pandemic, till now, in 2 years, it's up 175%, which is still insane. So I'm never one of those people when I'm looking to invest in a company by looking at like how much the stock has fallen in recent times, because none of that matters, right? There's always a stock that's down 50, 60%, and everyone's like, oh, it's an easy stock, it's down that much. And it's like, it's never the case. Now, as far as NVIDIA is concerned, one of the biggest things that you're going to have to definitely keep an eye on is going to be guidance. Guidance is something, especially when we have a recessionary period, which, we're officially in one, as well as a lot of supply chain issues that are happening right now, hyperinflation. A lot of things you're going to be looking forward to is going to be Q4 guidance, especially for many companies out there. This is across the board. Many companies, Q4 is their best quarter. So if their guidance is way lower than many analysts had expected for their best potential quarter, it's not going to be good. So remember, you're not just looking at EPS, you're not just looking at revenue, but you're also really watching guidance in the next couple of months. And I think that's going to be the biggest thing for NVIDIA. Now, if you've never looked into this company, and you guys don't know what they are, they're a semiconductor company. They basically create graphics processing units that enhance the experience of computing platforms. So they make graphics cards, and as well as many other chips. And you guys know that chips are very hard to find right now. There are a lot of, well, not as much now, but there are a lot of people in demand for computers and for chips. And there are just a lot of supply chain issues that, a lot of these chip manufacturers have been going through and having problems with for the past year or so, like we've been talking about. This is a very big company, $406 billion market cap. Revenue in the past 12 months was $30 billion. Net income, $6 billion. So the company is profitable. PE ratio is right now still, even down where we are right now, 58.96, where if we were to look at something like AMD, and this is one thing I do want to say about PE ratios, which I talk about in the beginner investors course I created. It's completely free. It's within our Discord community in the courses and seminar section. But PE ratio is, especially with tech companies, you have to look at how it is relative to other companies, because like the PE ratio of NVIDIA is going to be completely different than like the PE ratio of Walgreens, right? Tech companies, in most cases, normally tend to have much higher PE ratios. So that's something that you're going to have to remember. Now, looking at NVIDIA, like I said, we have a PE ratio of 58, a 5-year PE of 78, a profit margin in the trailing 12 months of 22%, and a 5-year profit margin of 28%. Price to sales ratio 13.5, dividend very, very small. Looking at the 8 pillars, you can see 5-year PE going off of everything money would not meet the requirement of being less than 22.5. It's at 78, which is pretty damn high, but still better than it was. Return on invested capital, 9%. Revenue is fine, 5 years. Net income is fine, 5 years. Shares outstanding, they have diluted shareholders a little bit, but it's nothing crazy. Cash flow, 5 years, fine. And price to free cash flow, 5 years, fine. So looking at all of this, the company already, in my opinion, seems like it's pretty overvalued, like many companies still are right now. Total current assets on the balance sheet is 27.42 billion. Taking a look at total assets, it's 43.48 billion, as well with total liabilities is 19.63 billion. So they've doubled the amount of total assets that they have towards total liabilities, which is a very good sign. They could pay it all off tomorrow. Looking at the income statement, obviously this company is growing at a wild pace. In 2013, revenue was 2.2 billion. In 2022, it was 18 billion. Now, something that's just wild, without cursing, is that like their revenue in 2020 was 14 billion and their revenue in 2022 is 30 billion. So within 2 years, they have doubled their revenue. Within 1 year, their revenue is not, as crazy, but still from 24 to 30 billion is very nice. And gross profit going from 10 billion to 20 billion. So they've doubled revenue and doubled gross profit, which is a very good sign. If a company's like doubling, tripling revenue and they're not double, tripling their profit margins, then that's not a good sign. That company is burning money. But this is a very good sign. Now let's take a look at the analyzer tool, which is really why I use this. It's really good for making YouTube videos, but let's just take a look at what we should be paying for this company. I love NVIDIA. I really do. I've contemplated being a shareholder before, but every time I want to invest in the company, it's just overvalued. And if we've seen anything in recent times, is that companies can be great companies, but they can be disgustingly overvalued. I don't want to just buy a great company. I want to buy a great company at an insane deal. And that's what we're looking at right now. So revenue growth over the past 10 years has been 25%. As a low expectation, I'm going to put 10%. This is because as a company gets bigger and bigger, usually it's harder and harder to grow. Now, this company has actually not been doing that. In the past year, they've grown more on average than they have in the past 10 years. But let's do 10, 15, 20. Because if the numbers make sense with very conservative numbers, then it's going to be great when our assumptions outweigh our worst case scenario. Profit margins, 22, 28, 26. We're going to go again with 10, 15, 20. Now, free cash flow, we're going to go with the same thing. 10, 15, 20. PE is at 58 right now. We're going to go with 30, 40, 50. And then again, for price to free cash flow, 30, 40, 50. And now I'm going to go for 15% because I want at least a 15% return per year, or it's just not worth investing in a stock. And as you can see here, if you believe that our high assumption is going to be correct, that within the next 10 years, they're going to be able to grow on average 20% a year profit, which you have to realize that's going to be basically quadrupling in the next 10 years, revenue growth. So they would be doing, right now they're doing what, $30 billion a year right now. So they'd have to be doing a lot more than that. Profit margins would be 20%, free cash flow would be 20%, PE would be 50, and desired annual return would be 15%. You'd be buying this, anything under $220 is a steal. Now, realistically, I think the middle is more realistic. My low is very, 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 very conservative, but my old numbers would be 15% growth, 15% profit margins, free cash flow margin being 15%, PE being 40, and that would say anything under $92 is an auto buy for me. Now, looking at NVIDIA, we are nowhere near $90. At one point, we were actually at 108. So your time to be buying recently was down here back in October. That would have been your time to buy. Now, best case would be down in the 90s, but ultimately for me, I'd really consciously be saying anything under $100 is like a solid buy. Now, will we get back down there? I have no idea. Like, I'm just going to be honest. I'm not a fortune teller. Looking at this from a technical standpoint, right? Just from a technical standpoint, this weekly chart looks like we're probably going to break back up to $200 in the next 6-7 months. However, looking at the economy and looking at how things are, I ultimately think the market's going to make another leg down, one final leg down, which means we could potentially see NVIDIA back down at the 130s, 120s, and 100s. So for me, I would be looking at getting ultimately down at the 90s. But if you're somebody who feels like they missed their chance and NVIDIA drops to like 130 in the next couple of weeks, if you're really obsessed with the company, it's a good price to have NVIDIA long term. It's not wild, it's not a steal, right? It's not something like, in my opinion, like Meta, but it is a great company to invest in. So I hope this video helps, guys. Hit the like button, subscribe. If you have any different tickers you want me to do a video like this on, please let me know in the comments section. As always, thank you for all of the support, and I will see you guys tomorrow. Peace.